Welcome to Breaking Banks. Welcome to Breaking Banks. This week we have our good friends from Plaid back on the show. John Pitts, welcome back to the show.
Great to be here as always, Brett.
So if you've listened to the show before, you know John is the policy lead at Plaid, and we are going to get into a recent partnership they've done with Royal Bank of Canada, RBC, how that partnership came about. And so to help us with that, we have Shekher Puri, the Vice President for Digital Components and Platforms. Welcome, Shekher.
Oh, pleasure joining you today, Brett, and seeing my friend John.
Yeah, digital components, so is that like neuromorphic chips, or what is digital components?
It is a bit of an intriguing title, isn't it? Well, really, look, fundamentally and simply speaking, what our team does is we explore different patterns and digital capabilities that are in the marketplace to power various different customer journeys across RBC and our various different services that we offer clients.
Yes, at least we've got rid of the digital and innovation job titles. They've gone away because the whole bank should be innovative these days, right? That's the cultural position. And obviously, we're talking about the Canadian market, which is great because we obviously have a ton of listeners out of Canada. So welcome to the show. First of all, who wants to start? How did this partnership come about?
Well, I can kick off a little bit of it here because really it's a classic story of a bank and a data network walk into an industry consortium meeting at the Financial Data Exchange, and their eyes, meet across the table. No, the partnership really came about because after Plaid entered the Canadian market in 2018, we were really looking for ways to serve our customers better and ultimately serve the consumer better in terms of giving them access to their financial data. And at the end of the day, good access to financial data means giving the consumer the quality, control, and security you get from an API. And that's not something that Plaid can do itself. It's something that we need a partnership with the bank. And as we sort of looked around the market and did in fact engage with RBC in FDX and also in some other consultation sessions and bodies, we realized we had a partner in the market who thought about the consumer the same way we did. And that ended up being really, to me at least, the foundation of what let us build this deal, was that joint recognition that we thought about the consumer the same way, we had the same concerns and cares for our shared customers, and wanted to figure out a way to make data access work better for them. At least that's how I see the origins of the story.
That's great, and again, very similar origins as well here. I mean, just to step back for a moment, from an RBC perspective, one of the trends that we've been seeing more and more and really accelerate over the last little while is clients shifting to more digital banking and digital solutions, and wanting to use those solutions for things like budget apps and financial tools, leveraging financial management software and whatnot. And this was, it's very natural in regards to our DNA at RBC to be looking for ways to ensure that we're looking at methodologies and new forms of ways to provide value for our clients. So from an RBC perspective, one of the things, Brett and John, that we realize is, look, we know our clients want their primary banking relationship with RBC. But what they also want is to be empowered with the ability to access and use and share their financial data with applications outside of the bank. And really, this quest of looking for ways to provide clients this value and this ability to share their financial data to power some of these third-party applications naturally led us to talking and initiating conversations with Plaid. And as John said, look, we had a lot of conversations with Plaid across various different consortiums and forums as well. And we quickly realized that we both shared a lot of common values. We both shared, the value of trust with our customers, and we wanted to build off of that. But we also shared strong values in ensuring that there was strong protection and security when clients were doing this data sharing as well, and also acknowledge that, look, there's a lot of technology changes and transformations across the industry in regards to data sharing and various different patterns that are being used, and really that's what drove the conversation with RBC and Plaid.
Obviously, I'm a big fan of fintech and bank partnerships because I think the emerging ecosystem makes that a necessity. But one of the things that we've struggled with in the past is really having a marriage of two equals in respect to these types of partnerships. But you guys have been doing more fintech partnerships lately, Shekher. So, how would you describe the maturity within RBC now in terms of engaging with organizations like Plaid, and how's that different from vendor relationships in the past?
Well, listen, Brett, in regards to, I've been in my role now for about 3+ years, and we've always had great relationships with vendors or third-party suppliers of solutions. With Plaid, just from a partnership perspective, and I think this is what really made it a very successful partnership, was the fact that I don't think any of us were really trying to win a negotiation or trying to get the best deal for their side. I think, and I think, John, you would see it the same way, that this was really an open, honest, intellectual, practical conversation on how do we leverage the collective expertise that we each have in our respective domains, and really take advantage of that approach and put the client at the center of it, right? What is the strongest, version of the point of view that each organization brings? How do we leverage that and really design an experience where a client has a better and a safer way, a better user experience, more control over the data that they're sharing, in order to enable them to leverage, broader and more innovative solutions that are out in the marketplace as well. So I think, Brett, this particular data access agreement, that we have with Plaid, is really an example, and it's a great example, frankly, of the industry being able to come together and really, building out new standards to create a safer and more comprehensive solution for Canadians to access various different financial solutions as well. So I think, just culturally speaking, I think it was just the mindset that we wanted to do something with the client at the center, and that was the most important thing for us.
And Shekher, I completely agree, but let me build on that a little bit, because I think you're underselling one of the things about RBC that made this work so well, right? In those shared values. And Brett made a joke earlier about, innovation being at part of a bank versus being at the entire bank. And I think our shared commitment and RBC's very obvious commitment to innovation and safe innovation and consumer-focused innovation was part of that alignment in philosophies that made this work. Because the reality is, Brett, you know this better than anyone else, there are some institutions that look at change in the world and say, oh, we've got to stop that change, right? And RBC's approach to this has always been, we see what our customer wants, and it's our job to help them get that safely, right? And get that in a way that is well delivered and delivered with the quality that they expect from the RBC relationship. And I think that was a really fundamental alignment area for Plaid and RBC in helping this happen, because we're strong believers in innovation, and often the innovation conversation between banks and fintechs can boil down to, well, if the bank says it, the fintech thinks it's wrong. And if the fintech says it, the bank thinks it's wrong. And being able to have, exactly as you said, Shekher, that that open and honest and really principles-based intellectual discussion about how do we do innovation, how do we put the consumer at the center of it. That was the core of this deal, and that was the cultural alignment that was necessary for us to get into an agreement where the consumer is the winner at the end of the day, right? Like there is a winner here. The consumer is the winner, and that's what we both wanted.
Well, I can only talk from my experience, but in those early days when we were doing partnerships with banks as moving as a fintech, I remember, one partnership we did, it was probably 3 to 4 months to get the tech right, and it was like 9 to 12 months to get the agreements in place, so which is actually not an efficient use of fintech time. Having said that, Plaid's a very different organization from Movin in terms of your size and exposure. But on that, John, you guys are, you're in Europe, you're in North America, obviously, both US and Canada. Canada started a little slow when it came to sort of some of the fintech regulation and so forth, but they seem to be, really putting the pedal to the metal right now. But how would you categorize the Canadian market in terms of the data side, open banking, that sort of stuff, in terms of the progression of policy in the Canadian market versus elsewhere where Plaid operates?
I have been made fun of before by talking about how excited I am for what is happening in Canada right now. But I am genuinely excited because the reality is, Plaid has the advantage of being able to see across multiple jurisdictions as people have worked on how to give consumers secure data access. And while Canada did not move as quickly as, say, the UK or the European Union with open banking or PSD2, what I see in Canada right now is a made in Canada approach that is fit for purpose for the Canadian market, but also has the benefits of seeing what worked and what didn't work in other jurisdictions. So let me just give a little bit of example to ground that. The UK, when they did open banking, to me, there were two really big flaws at the core of what they did. It was great that they did it, but there were two core flaws. One, the scope of the consumer data right was just current accounts, right? So your payment accounts didn't include savings, doesn't include mortgage. That's not how a consumer thinks about their financial lives. It forecloses a lot of the innovation that's out there to not have that data. And then in some ways, even more importantly for the long term, and Brett, one of the reasons I think we make these investments, and I don't view it as a bad investment in time to spend multiple months talking with a bank to get this right, is we really are talking about infrastructure for the next 50 years here. And so getting it right at the beginning is worth that investment for the long term. But the other gap in the UK was it was a one-way data flow, right? Banks had to allow their customer data to flow with the permission of a customer to a non-bank, but there was no ability of the consumer or no right of the consumer to share it back with the bank, share fintech data back with the bank if that's what they wanted. And I think there's an opportunity in Canada now to move beyond some of that and really put the consumer at the center of the narrative and say the consumer wants access to all of their data wherever it is. And also that means that the best innovation might come out of a bank like RBC, where they can build a great new product that uses this more sort of consumer-focused data portability. And that's how good competition should work. There should be a level playing field for all players, and the consumer should be at the center. But I think that's where we are right now in Canada, is a path to this sort of evolution from what's happened in other markets.
I think it's also important to acknowledge the fact that, our starting position in Canada, I see it a little bit differently than other jurisdictions. I mean, we know that there was a degradation of trust with consumers and their trust with their banks in jurisdictions like the UK as well. I think for Canada, it's a different starting position. I think, customers here do trust their banks, and banks have had a long history of building those relationships. I mean, RBC has been around for 150 years, and so there's a lot of strong foundational elements and a position of strength that we're coming from. Now, data sharing in Canada has been going on for years, albeit it does use a method that we all commonly refer to as screen scraping, but data sharing has been happening here in Canada. So I think we are coming from a position of strength in regards to some of those foundational trust elements. I think we're coming from a position of strength in regards to clients' receptivity and appetite to want to share data and leverage third-party applications as well. And I think there's something really profound in what John shared, that this might be a great example of why or an example of why there isn't a first mover advantage. It really does give us the opportunities to learn from some of the mistakes of the jurisdictions that went ahead of us. And, one of those mistakes I would think is also around, a common user experience, right? Like you have a client that, downloads various different third-party applications, and a consistency in regards to what that flow and experience looks like is absolutely critical from an adoption perspective as well. So I think that's why those conversations that we had up front, to make sure we got it right, we thought through all of these things. We looked at all the different blind spots that we may have, and brought in some of our collective knowledge on what happened in other jurisdictions, what made them successful, what didn't. I think really sets us up for success here.
You've talked about control of data and user experience, but can you be specific? What does this partnership with Plaid let you do, or let your customers do rather, that they couldn't previously do? Or what's it going to lead to?
Yeah, I mean, Brett, the way I would look at it is, it's not so much, a radical change on what it allows a client to do. I think it's more of a change in regards to how they do it. And I think what we've worked through with Plaid is a method that actually gives clients greater security and greater control over the data that they share. It gives them easier access to select which data bundles they'd like to share. It gives them transparency on how that data is going to be used, and who it's going to be used by, and also gives them the ability from a user experience perspective to modify, edit, and revoke in a very simple way. So really, the solution does center around the client experience. Look, I have a third-party app I download. I'm a client, and I select account A and B as part of the data sharing that I want to do. And in the future, I decide to change my mind and I want to add account C and D as well, or I open a new account. Well, that flow needs to be super easy for clients to be able to go there and like I said, modify and edit, and knowing that all the participants in this ecosystem, so whether it's the data provider, a data access network, a data recipient, that all the participants are following a common standard where everyone is looking at security, everyone's looking at privacy, everyone is looking at monitoring and operational controls, encryption, that they're all following a particular standard, and that trust, that level of assurance, is absolutely critical for an end user. They need to know that they can trust this particular flow or mechanism, and that all participants are looking out for their best interests when it comes to, again, security and privacy as well. And I think that's what's going to drive even more adoption than what we've seen currently or previously.
I think Shekher is exactly right there in laying it out. And I want to sort of refer back to something that he said about the Canadian banking system, because I think it's critically important here, which is how much trust there is in that system and how critical the trust is to extend into this new world. So financial services is always a trust business, right? That's the core of the business in all financial services. But Canada didn't go through the 2008 financial crisis in banking the same way that the US and other jurisdictions did. And we don't want there to be any crisis of confidence as we give consumers these new options and these new third-party opportunities for how to manage their finances. And that means finding ways to appropriately extend the well-earned trust that banks like RBC have established with their customers into this new digital environment. And Shekher's exactly right. What the consumer gets is, with that greater trust, control, and confidence, and the control and confidence that allow you to actually build that trust, there's even more opportunity for more consumers to use these services and to build out and personalize their financial experience in the way that works for them. But you can't do any of that without trust, and that's built on the partnership, right, between everyone who's working to be good stewards of that consumer's data as the consumer moves it through the system.
You know, I've got a thesis on this, and I'd be happy to get your comments on this, but I think trust has changed significantly as a result of technology. And I think, the reason for this thesis is there are certain fintechs or tech fins in this landscape that have at least as much trust when you score it as traditional banks. And I think that is because utility is starting to become a major factor in trust of brands, especially in banking. So, if you think about it this way, if a major bank in the US or Canada, and we've just had a credit union in the US go for something like 3 weeks with their entire digital platform down, right? But let's say JP Morgan Chase or someone like them, Wells, they have a ransomware attack or something, and their digital platform is down. You can't use the mobile app. You can't use the point of sale, but you can go into a branch and get cash out, right? You can't use an ATM. How long would that brand remain a trusted bank if they can't execute on technology basis? I think that's why I think that utility is starting to become a very core element of trust. What do you think, John?
I think that's right. Although I would put it differently than utility. I would say it is meeting the customer's expectations, right? The customer's expectation is that it works and that it works safely and that they have control over it. And that's where trust has always come from, is that meeting of customers' expectation, right? If you put money in the bank, the money will be there when you ask for it. If you ask for, allow your data to be shared with a third party, you have the power to turn off that data sharing if it's no longer working for you. They're really just extensions of the same basic concept of meeting your customers' expectations. And as those customer expectations have changed, the onus is on companies like Plaid and RBC to find a way to meet the expectations of today and tomorrow as they shift.
So, Shekher, I've got a question for you here. You talked about the previous tech around screen scraping and so forth. So, what about credentialing on this tech? Has there been a change in the way it's worked from, as you say, the previous screen scraping tech to now how you've integrated?
Yeah, I mean, yeah, there's a fundamental shift in regards to the pattern that we're putting in place here, where really a client no longer needs to provide their login credentials and passwords to a third party. So basically, I mean, look, the simplified flow in all of this is, client downloads a fintech app that's powered by Plaid. And the fintech app basically says, hey, here's our value proposition. Client downloads it and says, we need your consent to collect, information. And client provides their consent. And really, this is where the beauty of the Plaid solution is they power all of this, and it's a redirect basically to the FI's property. And this is where the FI then does the authentication, and this is one of the strong layers of security in all of this. We do the authentication, and there could be a multi-factor or step up that happens there, and a client is then provided options on, and this is where we collect our consent or our authorization to share. And there's a transparency throughout this whole flow, right? From the data receiver side to the Plaid properties and the RBC side here as well. And the client selects, we do the authorization to share, and then it's a redirect back. So during that whole process, and it's overly simplified, but it's trying to get the point across here, is that there is no sharing of those credentials as well. The client is at the center of all of this. It's a smooth and seamless experience of the client. It's a back and forth a handoff that's powered by various different tokens that we're using here, but the client is at the center of all of this, and they have the access and control on what's shared, and they're a part of the experience throughout.
So you guys hold the PII information, but you can share transactional data, obviously. But you talked about the fact that that there's obviously the elimination of credentials from the traditional method. So do you use device signatures, or how are you identifying a specific customer when they come into the stack?
Yeah, look, we have a pretty comprehensive security stack where we have various different modes and methodologies of authenticating our clients. We use a combination of passive and active means to authenticate our clients. It's a pretty, Brett, sophisticated stack, and I don't want to veer off too much, but we do a lot of things on, the way I look at it very simply is we take a kind of a threefold methodology. We look at the overarching kind of perimeter from a cyber perspective as well, right? Various different threat detection methodologies. We have a layer of security on our front door, and then we obviously have security and fraud monitoring while in the container as well. So these are kind of all of the different, security, fraud detection, and cyber elements that we have put into place, where we have a pretty sophisticated stack that is always evolving, because the bad guys are pretty smart and they're pretty sharp as well. But we leverage that and those different methodologies to ensure that there is strong authentication throughout.
Okay, great. Listen, let's just take a break, guys. And then after that, I'd like to talk about how you operationalize the partnership and what happens next. You're listening to Breaking Banks. I'm Brett King, your host. We'll be right back after these words from our very kind sponsors. You're back with us on Breaking Banks. I'm Brett King. Before the break, we were talking with John Pitts and Shekher Puri about the RBC and Plaid partnership that is taking place in Canada. So what comes next? What happens? Give us a view of what happens over the next 12, 18 months.
Well, look, I'd say once we get live with this, the beauty of this partnership is that our 14, 15 million clients and our digitally active clients will be able to access. I think John, you folks are just shy of 8,000. I think 7,500 apps in your ecosystem, the ecosystem that you folks power. So the beauty of all of this is our clients will now be able to access, those particular applications in, all of the beneficial ways of this new pattern, a safe, secure pattern where clients have, again, access and control to start to leverage these applications and that are powered by their banking data. I think that's part one, Brett. I think part two also is some of the strategic conversations that we're having with Plaid as well. Look, RBC offers a lot of these applications when it comes to budget tools and insights tools and forecasting tools.
They call it financial health now, dude.
Yeah. Financial health, lifestyle type of applications as well. But at the same time, I think we're humble enough to know that there's a lot of great innovation in the broader developer community that's taking place as well. And, in some places we're going to compete very much, but in some places it absolutely makes sense to partner as well, and bring those experiences to our clients more directly as well. And I think the partnership with Plaid really enables us to start to explore those areas. I mean, you mentioned them, the home buying experience, right? How do you get on the client's journey to position, some of these innovative products and services, so that way it's not intrusive. It's very natural for our clients as well. And I think that's the second piece that John and our team gets really excited about, is what is that, those new value pools that we're going to be able to explore.
So John, and from Plaid's perspective, how are you guys tracking in Canada, and what else comes into play here, or what other news have you got that might come into play?
Well, first of all, I would love it if we were at 7,000 to 8,000 customers. Shekher, thank you for the compliment. We're closer to 6,000 customers, right? But it's so great that they're going to be that every RBC customer is going to have that access to those 6,000. And from my perspective, that's just one half of the network, right? Because what really needs to happen is that every customer of every FI should have the ability to safely share their data on a high quality API. And one of the things that Plaid and RBC do together, we're both board members of the Financial Data Exchange, which is building this common API architecture for consumer financial data sharing. But that's still a lot of work for each FI to do, to sort of interpret within that structure how they should build out their own API. And so Plaid recently launched something called Core Exchange. It's derived from the FDX specification, but it's really a implementation spec, something that is a roadmap for building to that API standard. We think that's a way for every bank, including all of the really great small credit unions in Canada, and the community banks and credit unions in the US, to give their customers the same benefit of that secure, non-credential based data access to our 6,000 plus customers. That's what I'm excited about. The future of this really is that network shape model where a consumer anywhere can share their financial data wherever it is, safely, securely, and without sharing their logon credentials, in order to get a better product or service. And so that to me is the next step from here, and continuing to work with our friends at RBC to get this implementation right and make sure that that their customers and our customers are happy with it.
It's a nice way to wrap up, but Shekher, that's a good illustration of where fintech partnerships like this bring you differentiated capability that RBC could not necessarily ever match. Like getting 6,000 apps onto the RBC ecosystem would be extremely difficult without a partnership like Plaid. So, our pitch line to banks for Moven's always been that fintechs bend space and time. We can do it faster and cheaper just because, we don't have the other organizational constraints, policy, legacy, software, all of those sort of things, legacy systems. That's what enables us to do the technology and implement rapidly. So that's another part of it. But great to have you guys on.
Did you just call policy an organizational constraint? You and I might need to take that outside, buddy.
Bank policy. Bank policy.
I know. I'm joking.
Yeah. Well, it's a driver of innovation in some cases as well. But, let's just talk about wet signatures. How, who drove the change on, eliminating wet signatures? It wasn't, I don't think it was banks. I think that was largely fintechs. But we could have this debate, John. We certainly could. But
maybe next time, Brett, right?
Yeah. Where can people find out more about what you guys are doing in terms of the partnership, apart from listening to the show?
Yeah, well, look, I think there's been several releases that we've done in the media as well, and Brett, what I can do after the call is I can leave you with some of our details to our PR department as well. My colleague Rob is a great place where if folks want to reach out and learn a little bit more, he can get folks in touch with the right people in the business. That could be me. That could be a member of my team as well. This is something that we're very happy to talk about.
And are you on LinkedIn or? Twitter? Or?
I am on LinkedIn.
Okay, good. Well, that's one way they can reach out to you too. So, John and Shekher, thanks for joining us on Breaking Banks today, and all the best with the ongoing development of the partnership between RBC and Plaid.
Yeah, it's very
Excellent.
exciting. Thank you very much.
Yeah, thanks, Brett.
Fantastic. All right, let's move on to what's next.
Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hey, everybody, and welcome to the Finovate podcast. Joining me today, we have Tiffani Montez, Principal Analyst of Insider Intelligence. Tiffany, thank you so much for joining me today.
Yeah, thank you. It was great to see you in the spring, and thank you for inviting me to be a guest on the show today.
Yeah, no, I wanted to follow up on the conversation that we kind of started at Finovate Spring. But before we jump into that piece, can you start by just giving us some background on yourself and where you're coming from in the industry?
Yeah, absolutely. So I am a principal analyst at Insider Intelligence, leading our banking vertical. For those of you that aren't familiar with who Insider Intelligence is, we are a trusted resource for digital transformation intelligence. And so really our team has deep experience that allows us to deliver relevant and timely analysis across 4 key coverage areas. And those areas are financial services, marketing and advertising, telecom and technology, and digital health. I've been with Insider Intelligence close to a year. Before that, I was the strategic advisor at IT Navarca, covering really anything related to digital experience. And then before my time at IT Navarca, I was the head of operations at Terrafina, helping our clients launch account opening solutions. And then before my time at Terrafina, I was an analyst at Forrester Research for a few years, again, covering a variety of topics that fall under the digital banking umbrella. And then before my time at Forrester, I was with Wells Fargo for 20 years. I won't bore you with all the details of what I did there, but I'll focus on the last 10 or so years of my time there. And that was really helping them build digital experiences for various product groups within that organization.
No, that's excellent. I mean, I think the experience that you've got, the number of different viewpoints and angles are really something that is very unique. And I think we got a little bit of that when you joined us at Finovate Spring back there in San Francisco. And there were 2 sessions that we had you talking about there, and thanks for your help with both of them. The first one was kind of about financial wellness and inclusion, and then the second one, you were on a panel talking about how banks can deliver on an outstanding customer experience. And I think given kind of what you just shared about your background, it's easy to see where both of those, or how both of those topics became something that you're very comfortable speaking on. What I want to talk about is something maybe even a little bit higher level than both of those, and that's just sort of this general concept of customer happiness. How do we keep customers happy? I think this is a question which sounds really simple, but is actually really complicated. And so let's go ahead and break it down a little bit, because I think all these elements will play a factor there. Let's start by just this kind of relatively simple question. What do you think are the key ingredients banks need to deliver to make their customers, quote unquote, happy?
Yes, I think I'd start with 3 things. The first, which in my mind is the most important, is really about consumer trust. And so how do you safeguard consumer trust? We know that digital trust is the confidence that consumers place in their bank's digital channels. And they have really a prime opportunity to build this up as a commodity. So we know over the last year, the largest US banks have come to aid in a time of pandemic-related crisis. And customers have repaid that flexibility with greater trust in their primary financial institutions. And so really banks should look to position that strength to deepen customer relationships as, the US has, we'll call it return to normal, but also as we start to enter potentially a recession, safeguarding that trust becomes really important. I think the second thing really is about giving consumers the digital features or the experiences that we demand the most. And so when we think about experiences, we know today that a mobile experience is critical for financial institutions, given their heavy reliance on the channel. So based on some research that we did towards the end of the year, we know that 87% of consumers in the United States that we surveyed said that mobile is their primary way to access their checking accounts. So really making mobile the most impactful channel in a customer's banking relationship. So, really oftentimes financial institutions think that the more features that you have equals a better experience. And what we know from our research is it's not about more features, it's about the sophistication of this feature. Does the feature provide unique customer value? So really focusing on the things that consumers want the most. The third thing I would say is really focusing on building empowering financial experiences. And so in the May of this year, we know that the cost of living increased to its highest rate in more than 40 years, really eroding consumers' personal savings. And so according to the U.S. Department of Commerce, the personal savings rate, so personal savings as a percentage of disposable income, dropped to 5.2% in April. And that's the lowest it's been since October of 2019. And so we expect that financial institutions, in this type of environment, will start to lean much more heavily in delivering personal financial management tools. And we've seen, firms like Bank of America report that their digital financial wellness experiences through Life Plan has surpassed 6 million people as of February of 2022. So we expect that banks will continue to build out money management insights and making them increasingly more predictive and actionable. And what I mean by predictive and actionable, really in its simplest terms, is how do you move from making a customer aware of their finances and be able to start to use different features to begin to surface financial insight. And through that financial insight, how do you help consumers understand how their financial behavior impacts their ability to meet their goal, and then be able to deliver actionable advice that aligns with that?
No, that's really interesting. I mean, that's a pretty comprehensive answer right there. And there are a couple different pieces that you touched on that we'll want to engage with. I think one of the big ones, obviously, is these kind of external factors that are coming in, the cost of living increase, the idea that we're coming into a recession. Obviously, these are things which make consumers unhappy with their finances. We're in a moment right now where there are a lot of people, maybe more people than we've seen in quite some time, who are really in a position where they're kind of hurting a little bit, where maybe coming in and checking their bank account is not something which brings them joy. And obviously, there's only so much that from a tech standpoint we can do to alleviate that. But at the same time, there are things that the industry can do to kind of help people still maintain a positive relationship with their organization, which you kind of talked about. I think trust is obviously a really crucial one. Let's talk about UX a little bit more, because I think it's clearly safe to say UX is really important in this area. But I think a lot of times we think of it about from the standpoint of the elimination of pain points instead of something that, quote unquote, surprises and delights, to take a page out of the Starbucks employee manual that I read somewhere around 15 years ago. How far do you think a good UX can take you in this quest?
I think a good UX can take you a long way. But when I think of UX, I think about it under a couple of different core principles in my mind that, I think when we think about UX, oftentimes we look at it under the context of how you use technology. But to me, it's really more about the overarching experience that you build with your customer and how they interact with you. And so when you think about an overarching experience, technology aside, what that really means is that you're demonstrating that you know who customers are, that you understand them, that you keep their best interest and society's best interest in mind, and that you're here to help them meet any of their financial goals. And so it's about doing all of those things, but it's also about proving all of those things to them in every interaction, every day. And so when we start to break that down, it really, for most financial institutions, will mean that they have to break their digital legacy mindset. So oftentimes UX is viewed in the context of taking technology, and unfortunately, a lot of times that means taking that technology and replicating the same process that exists somewhere else. But really, a good UX is about getting down to understanding what a customer needs, the best and easiest way to deliver all of that using the principles that I mentioned earlier and delivering on that experience in a transparent way. And so if I give an example of sort of legacy mindset and conversations that I've had with clients over the years and them having trouble sort of breaking that mold of doing things the same way that they've always done that. I'll give an example of, when conversational banking started to take off and starting to talk to clients about the different use cases involved with that. I recall having a conversation with a client where they wanted to use conversational banking in the application process, or like we'll call it the product discovery phase. And so the conversation was like, how do you use a chatbot to answer product related questions and then drive them to the best product? And as we had those conversations, it became pretty clear to me that they were taking conversational banking and sort of using it in the front loaded part of the process. But at a certain point, they started to pivot and just replicate everything that they were already doing in a digital channel, meaning they wanted to use the chatbot to converse and ask questions about products. But then at the end, they wanted to send them to a product selector so that they could answer those same exact questions that they just answered in the chatbot. And so, really a good UX, outside of the principles that I outlined earlier, really becomes about how do you look at the same interactions that you've had with consumers in channels in the past and completely reinventing those in a way that make it seamless, easier to use, actionable, and clearly demonstrate that the journey that you're taking consumers down is the right journey for them.
Yeah, and I love the idea of kind of expanding what we consider UX, because it really is this holistic day in, day out experience, not sort of a snapshot, not a one moment in time. I came into the app one time and did this thing and it was really pretty, which can be very important. Of course, you want the app to be pretty, obviously, but it's really much more than that. It's about creating this deeper experience so that people have a good experience every time they come in. And I think your point also about making sure that we're actually looking at this, what can we bring to them that we couldn't do before, rather than just kind of taking what we'd been doing, turning it digital and saying, hey, it's a brand new UX is, I think that's good as a first step, but it's clearly not where you need to be by the end. Let's move on to the kind of second side of it, which was looking at guiding customers to long-term financial health. Obviously, that's a really difficult one. There's only so much that we can do. We don't have control over our users' behaviors in a way that can help them, ensure long-term financial stability. There's obviously external factors at play, but I think this is one of those areas where clearly the banks that are able to create this kind of relationship and show that they're invested in their own customers' long-term financial health is really important. So I think this is where we kind of start talking about what is customer satisfaction or versus happiness. Maybe sometimes the customers who are the most financially secure sometimes seem the least quote unquote happy, which is maybe one of those interesting dynamics. But what's your take on this, and how banks should be thinking about their customers' financial health versus their quote unquote happiness? Sometimes doing the right thing here doesn't make you happy.
Very true. I would say that I view customer happiness and even satisfaction under the context of trust. And I talked a little bit about this earlier, but when we start thinking about digital, and one of the things I shared is that mobile clearly is the primary channel where consumers interact with the banks the most. When it comes to trust, it's really about how you deliver on, I would call it 6 key factors that influence a consumer's trust of a financial institution. And so when I think about these different factors that come into play around trust that drive satisfaction or happiness, as we talked about earlier, it's about security, it's about privacy, the reputation of a financial institution, how reliable they are, how easy it is to use their digital banking capabilities, and their feature breadth. And so one of the things that we do every year is we do a survey on banking digital trust. And we go out and survey a little over 2,000 U.S. consumers to determine how they perceive a bank's digital trustworthiness. And we really look at the top 10 U.S. banks across those 6 different dimensions. And so one of the things that we found in this particular study is that digital trust really is essential to retaining customers and boosting revenues. And so, while also giving banks an advantage over their non-bank rivals. So our survey shows that U.S. digital banking users with higher than average levels of digital trust are more satisfied and engaged with their bank. And as a result of that, they're more likely to open up their next account or product with their current bank than any other, digital banking users with below level trust. We also know in this period of time that there are threats to retaining that type of trust, and that incumbents are competing with heavy or tech savvy, deep pocket rivals, such as neobanks, big techs, or even retail brands on digital experiences. And that there's a surge in new banking users has increased the potential for things like cybercrime, breaches, and even PR disasters in some respect. So we know right now that banks must work really hard to be able to keep that trust advantage by defining some of the key areas across those 6 pillars that I mentioned earlier to improve trust. And if I were to share just kind of sort of the tidbits of that study and of the 6 categories that I mentioned earlier, which ones are the most important? Security really was the top factor for determining trust. And that, the lingering effects of pandemic-related fraud has only escalated concerns. We also know that privacy was the second most crucial factor in determining trust in digital banking. And it will become the most important factor in the face of third-party cookie death and even tighter regulation. And then the third one that I'll mention, again in order, is that reputation affects digital trust in banking. So banks really need to find ways to cement improved customer sentiment. And really, as we enter again an environment where consumers are going to face financial hardship in some cases, how do you maintain your reputation by demonstrating that you're doing not only what's right for your customers, but what's right for society?
Yeah, no, that's a lot to unpack there. And I'm afraid we're kind of running out of time a little bit here. And I want to just quickly get to sort of the last couple of questions here for the final 2 or 3 minutes, which really talk about kind of bringing this back into the real world. The reason we're talking about this, of course, happy customers are much more likely to stay customers. They're much more likely to build this long-term relationship. So really quickly, what would you say are the things that banks really need to be doing right now that maybe they didn't have to do even 5 years ago as a result of sort of this economic uncertainty that we're facing at the moment?
I think the biggest thing that financial institutions are going to have to do right now is to really break the mold and to find new products, services, and even experiences that consumers need the most. And to do that, it's going to be really important for them to keep an eye on competition. And we know that competition now increasingly includes, competitors like big tech and even retail brands. And so really to look at the experience they deliver and where they might be embedding products and services. So, given everything that's going on in the financial services ecosystem, it's going to be really important for financial institutions over the next few years to really understand how they're going to play in emerging touch points like embedded finance, super apps, and even the metaverse.
How about from the other side? How about from the fintech innovator side? What opportunities do you see for that group?
Gosh, I think the fintechs have a rough road ahead. We know that they've been a casualty of 2025, and that largely has to do with funding drying up. And, as a result of that, many of the fintechs seeing their valuations fall. So some of them have, been cut in half and worse. And we know the 3 most prominent players in the space, neobanks, buy now, pay later, and even crypto firms are the ones that are probably suffering the most. What I would say to them is, really at this point, it's good to be grounded in reality and to make sure that you really understand and that you recast what you think that your growth looks like. The second thing that I would say is, really to carefully assess competition. Competition isn't just other fintechs. Competition is also incumbent banks, neobanks, big techs, and retailers, as I mentioned earlier. And so it's really going to be about making sure that you are using the funding that you do have to make investments that create unique customer value.
Yeah, and I think really you kind of hit the nail on the head there, where clearly there's a moment where there's a lot of uncertainty. There's a lot of competitors coming into the space. It's time for everybody to just sort of be maybe a little bit more cautious, be aware of all the different threats that are coming in, but at the same time, recognizing that there are a lot of opportunities here to come and do things which can really make customers' lives better. And I think this is one of the challenges that we have. Again, there is only so much that fintech can really do, but at the same time, those banks that excel here, those banks that keep the customer at the forefront and really give people the experience that they want, not just from this is a pleasant experience that I enjoy, but long term, this is an experience which is going to bring me to financial health. I think it's going to be a very competitive space, but there will be some winners who come out of it. So there's obviously a lot more we could talk about, but I'm afraid we have to end it here. I really do appreciate you taking the time to talk through such a nebulous topic with me. It's been a pleasure, Tiffany.
Yeah, it's been a pleasure. Thank you again for inviting me to participate in the conversation today.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.